Thank you very much, Odis. Can I just check that you can hear me okay? Very good. I've got a bit of an echo, but I think that's all right. Thank you very much, Odis, for this introduction. And ladies and gentlemen, good afternoon. I'm very honored to have been invited here today to talk about the future of financial services in the European Economic Area. I would like to quickly start by thanking you for agreeing that I can take part in this conference virtually, as I just for personal reasons could not make it to Brussels today. Just now, I understand you heard colleagues from across the board, from private and public sector alike, to talk about this theme of green, clean, and digital, a theme which I think vividly describes the challenges and opportunities ahead of the financial services industry. Being the EU's financial regulator and supervisor, we at ESMA take these challenges very seriously. As climate-related provisions worsen and citizens begin to grasp the drastic effects that climate change has over all of our lives, making engaging in sustainable finance a key platform for concrete action. And actually in all of our also personal investment choices, this is becoming far more important. ESMA is determined to bring its contribution to the transition towards a greener and more sustainable economy. At the same time, we should also acknowledge that without undermining the significant achievement that has been already made and the new various legislative and regulatory initiatives that are currently present, there is a lot of complexity in terms of interpretation and implementation. Navigating through the many different offerings and understanding the differences in terms of sustainability remains extremely difficult, and the risks of mis-selling in that environment are clearly very high. ESMA is therefore driven by the need to increase comparability, to reduce complexity, and more broadly ensure that investors get the right picture to make informed decisions about how best to engage in investing sustainably. In parallel, as financial innovation continues to speed up, ESMA and the national competent authorities also assess the impact of technological innovation to support opportunities for market development where appropriate, while mitigating the possible risks that technological innovation can bring, and that needs to be adequately covered by robust EU rules. As highlighted in ESMA's recently released 5-year strategy, the need for agility and adaptability of the regulatory framework is ever greater, considering the accelerating changes in the financial markets driven by this technological innovation. We must both strive to ensure that regulation does not hinder innovation while maintaining a level playing field between players and products, and while assessing the impact of technologies used in financial markets on the regulatory context. Our regulatory framework needs to be fit for purpose. The upcoming legislation in these areas, namely the Markets in Crypto Assets Regulation, MiCA, and the Digital Operational Resilience Act, DORA, as well as the Distributed Ledger Technology Pilot Regime, all of which you probably discussed earlier, serve this particular purpose. Naturally, one question that is raised every time such new legislation is put forward is, what is the right balance of opportunities and risks? Let me maybe highlight that there's also quite some opportunities stemming from technological innovation for us as regulators and supervisors. In line with our mandate under the ESMA regulation, we are increasingly involved in topics related to regulatory technology and supervisory technology, or RegTech and SubTech in short. Indeed, with the growing number of direct supervision mandates and an ever-increasing volume of data to analyze in that context, it is important that ESMA makes use of this toolbox to conduct effective risk-based supervision. And that equally applies to the national supervisors in all of the EU member states. That brings me, maybe after briefly having talked about these new challenging areas, onto the core topic of this afternoon, namely the work of the European system of financial supervision across the whole of the EEA and the opportunities and challenges ahead, particularly in the context of EU-level supervision. The European system of financial supervision was created in the aftermath of the 2008 financial crisis to establish a more integrated European supervisory framework. The aim is to ensure a true level playing field for all actors at the EU level and to reflect the increasing integration of the financial markets across the EU and the EEA. It is composed of the three EU ESAs, as we call them, so the European supervisory authorities, namely our two sister authorities, the European Banking Authority and the European Insurance and Occupational Pensions Authority, as well as ESMA, and also bringing into that the European Systemic Risk Board, and very importantly, the national competent authorities from across the whole of the European Union. However, the single market extends across the whole of the EEA, and therefore so must the work of the European system of financial supervision. It cannot end just at the boundaries of the European Union. It needs to grasp the whole of the EEA. In parallel, the EFTA surveillance authorities, whose existence long predates actually the European system of financial supervision, is in charge of monitoring compliance with all that relates to the EEA agreement, including, of course, the EEA-related EU financial services legislation. With this in mind, a multilateral memorandum of understanding was agreed between the three European supervisory authorities and the EFTA surveillance authority. A document which provides a basis for the cooperation between our authorities across the banking, insurance, and financial services sectors to ensure coherence in the work being undertaken at EU and EEA levels. The cooperation between the European supervisory authorities and the EFTA surveillance authority, if I can speak here also for my fellow ESAs, has been very good over the years, in normal times as well as in times of crisis. Maybe just as an example, at the height of the COVID-19 related market movements, for instance, we at the ESMA Board of Supervisors, which includes as non-voting members the EFTA Surveillance Authority, but also the EEA national competent authorities, had to meet very regularly, monitoring the market situation, exchanging information, and adopting, where necessary, emergency measures. In the very short time frame available for the taking of these measures, the cooperation between ESMA and the EFTA Surveillance Authority intensified and worked extremely well. I should also mention that throughout the years, the EEA national competent authorities' participation in the ESMA convergence effort in the ESMA board has been very good and really much appreciated. Statistics relating to notifications by NCAs of their compliance with ESMA guidelines indicates that over the last 5 years, the EEA national competent authorities have complied or have intended to comply where the legislation is not yet incorporated into the EEA agreement. And they have complied with the ESMA guidelines in the same proportion as any other EU 27 NCA. In the past years, in the move to ensure the strengthened, effective and consistent supervision of cross-border entities, ESMA has been entrusted with several direct supervisory mandates. And in this area, there has been even more direct interaction with the EFTA Surveillance Authority, who is the natural counterpart for supervision at the EEA level. And so the versions of the text incorporated into the EEA agreement entrust the EFTA Surveillance Authority and ESMA to work together on these supervisory mandates at EEA level. Considering this, the multilateral memorandum of understanding contains a specific set of cooperation arrangements in the area of financial markets that is related to supervisory and enforcement activity. More specifically, these arrangements relate to the CRA regulation and EMIR, which is the regulation for the post-trading market and infrastructure, as incorporated in the EEA agreement, which respectively designate the EFTA Surveillance Authority as the competent authority for the supervision of credit rating agencies and trade repositories. From our perspective at ESMA, the cooperation with the EFTA Surveillance Authority in this space has been very effective, and our regular dialogue has clearly helped. That said, in practice, the actual tasks relevant to these cooperation arrangements are somewhat limited, given that, for the time being at least, there's only one entity supervised under this arrangement, namely a credit rating agency that's called Nordic Credit Rating AS, which assigns credit ratings to financial institutions and corporate entities based primarily in Denmark, Finland, Iceland, Norway, and Sweden. You might wonder why the MOU is currently only relevant to this one CRA. Indeed, I alluded to the fact that the Memorandum of Understanding so far only covers the supervision of trade repositories and credit rating agencies, despite the fact that ESMA also became responsible for the supervision of, for example, securitization repositories, which started in 2020, third country central counterparties, which began in 2021, and more recently, data reporting service providers and certain critical benchmarks, where ESMA took on the responsibility at the beginning of this year. This is because the relevant pieces of legislation under which these other direct supervisory mandates for ESMA fall, such as EMIR 2.2, so the updated EMIR, and the version of the ESMA regulation stemming from the 2019 ESA review, have not yet been integrated into the EEA agreement, meaning that the EFTA Surveillance Authority and ESMA have not yet been mandated to supervise the corresponding entities in the EEA. Now, the two-pillar structure is core to the way the EU and the EEA function together, and it is necessarily an element of the EEA state's sovereignty. We do not need to recognize that where timelines for the incorporation of EU law into the agreement are too long, this risks creating distortions and regulatory arbitrage potentially, and certainly endangers the level playing field within the single market. One reason I mention that and mention it so frankly is, and why I believe it's important to recall the discussion on financial innovation and sustainable finance. But one reason is that the challenges and opportunities arising in these new areas are characterized by the speed at which they evolve and the potential significant impacts, positive or negative, that they have for retail investors, but also for stable and orderly markets. So they require a particular level of reactiveness and attention from policymakers and supervisors. As I mentioned earlier, it is with this in mind that pieces of legislation in areas such as sustainable finance, digital finance, and cybersecurity are being put in place. But these texts are all with EEA relevance. It is crucial that while the process for integration of EU law into the EEA agreement remains thorough, it is sped up so that we can ensure that there's a holistic set of rules, as well as strong and coherent supervision across the whole of the single market. In parallel, of course, one of the main challenges we are facing at the moment is the energy crisis. At ESMA, we've been working with the European Commission to identify and put forward measures to alleviate liquidity risks and other concerns in this area. As I just noted, some of the provisions on the basis of which this work is being conducted are not yet part of the EEA agreement. In practice, this creates significant risks of divergence, which is particularly problematic given the important role of EEA entities in the trading of energy derivatives. And obviously, Norway comes to mind here. There too, it is important to ensure the swift incorporation of the relevant legislation into the EEA agreement. Once that is achieved, on the basis of the current excellent cooperation between our authorities, I have no doubt whatsoever that we'll be able to ensure effective and strong supervision across the EEA for any mandates that might come our way. I would therefore like to take the opportunity of this conference to thank the EFTA Surveillance Authority for the excellent cooperation with ESMA, but also to exhort that the relevant parties should ensure that no more time than is inherently, of course, required by the two-pillar system is taken to include crucial pieces of financial legislation in the EEA agreement. Ladies and gentlemen, it was really a great pleasure to have the opportunity to speak to you today, even if only virtually. There's no doubt that we are going through a period of change with lots of challenges that will be amplified if they're not handled in a proactive and united manner. However, with change also comes opportunity, and I trust that we can come together to navigate and hopefully continuously improve our admittedly naturally complex system. With that, we'll be able to ensure that we have in place across the EEA the rules and measures necessary to ensure that citizens across our continent reap the benefits of the single market, making the most of financial markets as a means of saving and financing for companies and citizens alike. Many thanks for your attention, and I wish you all a very good rest of the afternoon. Thank you.